Hey traders, welcome back. My name is Vasily. I'm your trading coach and professional forex trader. What do you need to learn in trading to become a consistently profitable trader? In this video, I prepared for you 13 topics to study and learn in trading. 13 topics that you must know. These topics are very wide, they are very extended, and it takes time to learn all of them. But I guarantee you that once you study them, once you learn them, you will be able to trade the market consistently. You will be able to trade the market like a pro, and you will be able to analyze the market and predict its future direction easily. Don't forget to like this video, subscribe to my YouTube channel, and let's start. The first and very wide topic for you to start with is candlestick pattern formations. And as you know, there are different types of chart. We have the line chart, the range bar chart, and we also have the chart with the Japanese candles. And it is very important for you to realize that so much data can be derived just from one single Japanese candle. And knowing how to distinguish, how to identify the candlestick patterns can give you so much important data about the market, analyzing different time frames, analyzing different instruments on each and every time frame, on each and every market. Candlestick patterns are very important. Here on this example, I have the New Zealand dollar chart, and from a current perspective, the market right here looks like a complete mess. But what if we just simply identify the candlestick patterns right here? Look how many candlestick pattern formations we have right here. Look how many patterns were identified. And if you study candlestick pattern formations, you will see them everywhere. Just practice, just learn to recognize them, and you will see them everywhere. And you will see how accurately you will be able to predict the future market behavior with the candlestick pattern formations. You can see that right here we spotted different types of the candlesticks, and the main candlesticks for you to learn are doji candle, engulfing candle, rejection candle, inside bar. These four are the most important. Of course, there are a lot of different types of the candlestick pattern formations, but these four are the most important in my view, and start with them, and once you know them, then add more, learn more candlestick pattern formations, but start with this. Hey traders, our today's sponsor is Top Trading Signals. I know this guy from TradingView. He has a massive following there. He is the top author on TradingView, and I want to recommend his Telegram channel. There he posts 5 exclusive ideas per day. He posts the forecasts and signals on gold and silver, on forex market, on cryptocurrencies, and also he has a signal service. Definitely check this guy. The link will be in the description below. His Telegram channel is called Top Trading Signals. Check that, and let's continue. If you follow me for quite a while, you know that I am a pattern trader. I apply price action patterns for trading different financial markets and for making predictions, analyzing them. And in my view, price action patterns are the language of the market. With price action patterns, you can feel the behavior of the market participants. You can see the manipulation. You can see the action of big players, of market makers. And in my view, candlestick patterns will help you to follow the market, to learn where the market is reversing, where the market is preparing for the continuation, where the market is trading in the consolidation. Price action patterns are very, very, very important in your learning. Yes, and if you want to master technical analysis, if you want to become a consistently profitable trader, you must know the patterns. Here we have the pound Swiss chart, and again, the chart here looks like a complete mess. But what if we try to recognize here the classic price action patterns? Look what we'll get. Look how many patterns we spotted right here. Look how many price action patterns we identified. And once you train your eye to recognize the price action patterns, you will see them everywhere. As with the candlestick pattern formations, with practice, you will see more and more patterns. And the classic double bottoms, the double tops, they will be just naturally everywhere, and you will be so surprised how accurate are these patterns. Right here we spotted the double bottom, the double top, the triangle, the wedge. Yes, and it is just one single example. Imagine how many patterns you can spot. Imagine how easily you can predict the behavior of the market, of the price, once you learn to spot them. And here's the list of the patterns for you to learn. Yes, the main patterns, the classic patterns for you to know. Of course, it is double top and double bottom, head and shoulders pattern, wedge pattern, channel, flag. These are the triangles. These are the most important patterns for you to learn. Of course, again, we have more. We have a lot of different patterns, but these are the most important. Start with them, and learn to recognize them and identify them. How to identify the market trend? Most of the traders think that it is a very simple task to do, and most of the traders apply just the intuition for identification of the market trend. They just simply open the chart and they say it is bullish, or they say it is bearish. Yes, and if you ask them why, they will tell you just naturally because. Yes, and that is the only thing, that is the only argument that they have. But the point is that you must have very strict, very objective, very reliable rules for the identification of the market trend. And price action helps to identify the correct directional bias, to get the correct direction of the market. You must know that there are three main states of the market. The market can be bullish, the market can be bearish, and the market can trade in a consolidation. And for you, it is very important to have the rules for the identification of each type of the market movement. Yes, and here we have a gold chart, and again, let's apply our classic price action rules for the identification of the market trend in these different periods. With our classic price action rules, we can tell a story about the market. You can see that first the market was trading in a bearish trend. We saw a very sharp bearish rally right here. Then the market started to trade in sideways. We saw the local consolidation. Then we saw the market reversal. The market started to trade in a bullish trend. And then again, there was the moment of consolidation. After that, the price dropped, and we are trading right now in a bearish trend. Yes, you can see that just drawing the zigzags, just knowing the simple rules of the trend identification, you can tell a story. Yes, and you must learn to tell a story. You must learn to just open a random chart. Yes, briefly analyze the market trend and tell a story. And you must know where the market is going. And you must know why. You must have the reasons, yes, the objective reasons why the market is bullish, or why the market is bearish, or why it is trading in the consolidation. Support and resistance. And I know it is the cliche. I know it sounds like a cliche, but listen, if you ask a random pro trader, random consistently profitable trader, what should newbie trader learn in trading? Definitely the answer will be support and resistance. Why? Because the market tends to respect support and resistance. The market tends to react to support and resistance. And for us, the technical traders, support and resistance levels give the safest points to trade the market from. For that reason, you must definitely learn how to identify these levels. You must learn how to identify supports, how to identify resistances, how to identify them on different time frames, on different charts, on gold chart, euro dollar, each and every instrument that you trade. You must identify the support and resistance levels there. These levels are very important. You must learn how the price reacts to them. You must feel whether the price respects that, or whether the price is preparing for its breakout, whether the price will just give a slight retracement and will break that, or we can expect a major market reversal from that. It is a wide topic, and if you just Google what is support and resistance, most of the time the explanation is very short, and everything sounds quite easy. In practice, no. In practice, it is a very complicated topic. It is very subjective topic, by the way, because different traders perceive the chart differently. And for one trader, for example, the level is considered to be a strong support, but for another, it is just random place. So you must spend so much time practicing, learning how the price reacts to different levels of support and resistance. And then once you learn to spot the strongest one, you will be surprised how nice it works. Supply and demand zones. Quite often when you are looking for the support and resistances, you may notice that there are a lot of support levels or resistance levels lying very close to each other. And in such kind of a situation, I always recommend to unite these levels in one single area. And that area is called the supply zone if it is based on the resistances, or the demand zone if it is based on support levels. And it is very crucially important to learn to properly draw these zones, to properly identify its boundaries, and then to properly follow the price within that, and to know exactly when to buy the market, when it is the signal for you to buy, when it is the signal for you to sell, or when it is the signal for you to not trade at all. Yes. So once you study support and resistance, then learn supply and demand. Yes, once you learn to spot just the single levels, then your task will be to learn to identify the zones, the areas. Yes, because most of the time when we are looking for the structure levels, yes, most of the time it will be the zone, the structure will be the zone, the area, not the one single level. And for that reason, by the way, again, it is not that simple to treat the structure, because structure sometimes is quite wide, quite often it is quite wide, yes, and for you it is very important to correctly spot its boundaries. We are still talking about structure, and the fact is that structure levels are not equal. Some levels are strong, some levels are weak, some levels we consider to be major, and some levels we consider to be minor. And it is very important for you to have the rules, to have the objective rules to assess the strengths of a level. Yes, and the most important levels, the strongest levels, will be called the key levels. From key levels, we will expect the major strong market moves. We will expect the waves. We will expect strong bullish or bearish rallies. Yes, and the majority of the big winning trades will be taken from these levels. For that reason, it is very important for you to learn to identify these key levels. You must know which structure is weak and minor and which structure is strong and major. Yes, and only with practice, only with experience, only losing tons of money on different key levels, you will learn to spot the most important, the decent key levels. Right, traders, I hope that you agree with me that these topics are very important. I really want you to study all these topics. I really want you to practice all that, because in my view, if you want to become a consistently profitable trader, you must know all that. The next 6 topics will be discussed in the next video. Please stay tuned. The next video is coming soon, and I decided just to make 2 parts right here. Also, please guys, let me know what you think about such a video. Let me know whether you enjoyed that or not. Also, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching, traders.